Now, from the Signature Bank Studios. This is Chicago's Morning Answer with Dan Proft on AM 560. The Answer.
Top of the morning, Dan Proft here. Jamie Dimon, mentioned him last hour at one forum. I'm going to mention him this hour at another forum. A economic forum on immigration hosted by the Reagan Presidential Library. Jamie Dimon had this to say about America's immigration policies of the not-so-distant past.
Immigration, what the hell were we doing? You know, the bottom 20% of our population, you know, their wages didn't go up for 20 years. They're dying 7 years younger. You know, when administrations, you know, the Biden administration is giving all this money to EVs and cars and wasting a lot of money on green stuff, which isn't going to work, and all that. Do you think people in rural cities, do you think people in inner cities thought they were getting anything? Do you think that those people think that the American government is fair and competent and that this was in their best interest? Their schools don't work. They're not getting the skills they need, and you heard that just now. So we got to acknowledge these. And I also call it blue tape because, you know, Republicans, you generally don't like red tape. You understand the devastation of it. But, you know, most Democrats, they love it. They want more of it. And they want to make it so confusing you can't even meet the rules, so you get punished and fined afterwards. And so... You know, and then you have it in permitting, and, you know, I call the government the Leviathan that's too weak, can't get stuff done, and too strong. It imposes things on the American public that they're getting sick of, and they should be getting sick of it, and acknowledge that. Celebrate our virtues, freedom of speech, freedom of religion, freedom of enterprise, equal opportunity, family, God, country.
Yeah, I mean, that's all well and good. Now that it's safe for him to say things like that. But at least he's saying it. Some still don't, even though they're, you know, basically insulated from professional consequences as the head of a big bank. But there are complications, too. Farm labor shortfall. The goal of President Trump and his Ag Secretary Brooke Rollins, create 100% American farm workforce. Well... that's running into the reality that there are a lot more jobs in farming than Americans want to do. To its credit, the Wall Street Journal reports the Trump Labor Department took steps to make it easier and less costly for farmers to hire seasonal guest workers on H-2A visas. Last fall, the department relaxed the wage mandate from the previous regime that required farmers to pay guest workers as much as $17.75 an hour and as much as nearly $20 an hour in California, provide housing, transportation. But here's the rub. Farmers received applications from U.S. workers for only 182 of 415,000 positions advertised in the last fiscal year. Farmers report that crops are wasting in fields because they can't find workers. Department of Labor warns that shortages are resulting in more food imports, which have become more expensive because of Trump's tariffs. For example, wholesale fresh vegetable prices have risen nearly 50% in the past year, according to the PPI. And I'm sure many listening have noticed, me not being one of them. But boy, it's a real complicated picture, only made more complicated by the military campaign in Iran at present. For more on these complications, we're pleased to be joined by Jim Perry, founder, CIO, Perry International Capital Partners. James, thanks for joining us. Appreciate it.
Thank you, Dan. I appreciate that, too. Have a good day.
So, you know, give us your handle on the state of affairs as food prices are rising, gas prices are rising even more than we would have anticipated until about a month ago. Right. We talked a little bit earlier in the program about Obamacare premium spikes for people that do not qualify for subsidies. Those are substantial. So that affordability issue that was much discussed before the war, that's not going away. And in fact, it may be even increasing in importance below the fold, and it will be revisited by the politicians come this summer.
Right. Well, like you said, it's a complicated picture out there these days, isn't it? This war overshadows everything. I've been doing a lot of traveling, seeing clients in faraway places, and it's interesting. The picture is really, you don't have to talk about economics very much because the war overshadows everything. But back to your view on Jamie Dimon, he's a really good banker, and he's got a very efficient company, and it's exactly opposite of what government does. So the point is, when people talk about vegetable prices going up, they're kind of talking their book too, right? They're in the profit business, and they can blame it on government. And Jamie Dimon's talking his book too, and says, well, this can be really bad, and inflation is really going to go up, and they benefit from that. So I think the employment situation and the economy situation in the United States is doing remarkably well. I mean, if you just look at the data, usually we talk on the non-farm payroll number, and it was kind of Easter week and all that sort of stuff. But, nobody expected 178,000 jobs and an unemployment rate at 4.3%. And retail sales are up, and consumer spending's up, and, airline traffic is up, and cruise ships are up, and hotels are up. And I'm in Florida, and it's busy down here still. And the economies where I have been seem to be booming. So I think everybody's got this kind of overlay of, good heavens, what's going to happen in the Gulf, So it's been a good couple of weeks to be out of the office because you don't have to talk about economics too much because we've got a bigger picture to talk about. So economically, the economy is doing okay. The job market's doing fine. AI is increasing productivity and demand, and they're starting to make some money. The private debt and leveraged loan business is a lot smaller than the mortgage market was in '08. So looking at the economy without the war, I think the odds of a recession are probably as low as they've been since pre-COVID, right? But with this war, it's probably 50-50 depending on the price of oil.
And what's sort of to the extent that there are discernible street expectations about Trump's waging of this campaign in Iran, from the 8 p.m. Eastern Standard Time deadline tonight going forward. When does the tipping point, or when do you get the sense the street is saying there will be a tipping point where the price of these inputs, starting with oil, becomes such that a recession is more likely than not? Right.
Well, I mean, I'm a market guy, right? I've been on the trading desk my whole life, and there's really one thing that matters to everybody. And I wrote this about 10 days ago in my weekly report. We're all oil traders now, Dan, right? We're all oil traders. And it really is the price of oil. The S&P 500 is at, 6,600, and it was at 7,000, so we're down 400 points from the high. The S&P is not going to go up until the price of oil gets back down to $60 a barrel. And for that to happen, you've got to have three things happen in the Gulf, which have not happened yet. And I'm not sure if it's going to happen tonight or not. At least one portion might. But, you've got to get a free flow of oil through the strait without threat, right? That's just number one. Otherwise, you're going to have a global recession. And then two, it's really got to be absolutely no nukes and a government that's going to abide by that kind of contract with, verification and all that sort of stuff. And then three, you've got to control this resource. You've got to control oil flow. And if you don't do that and the money that comes behind it, you lose. So those three items have to take place before oil goes to 60, and none of them are complete. And I doubt very seriously that by 8 o'clock tonight or midnight tonight, or, when we wake up tomorrow morning and see the futures prices trading over in Asia or something, I don't think oil is going to go down really hard, except for the guys that are betting against the rise. It's just we've got a lot of work to do in the Middle East before this market begins to feel better about itself.
Yeah, I was talking to somebody who's in that sector yesterday, and one of the things he was remarking upon is how unusual it is that the spread between the WTI and Brent was so narrow.
Right.
Particularly because we're talking about America as an exporter of energy, of oil and natural gas, and really operate and really, I mean, relative to the hammering the Europeans are taking, we're actually holding up quite well. But the global recession point that you made is, if Western Europe goes into a deep dive, and other relevant major economies, India, Japan, then we're not going to be, we're not going to be completely insulated from that.
Yeah, that's right. Brent is actually Brent is the global benchmark, right? It's priced in London, and it's actually lower than West Texas Intermediate, which is highly unusual. I think it doesn't happen, right? So that's weird. But oil, there's a lot of different prices for oil. There's Russian oil, there's Iraqi oil, there's Saudi oil, and the price of oil is determined by the amount of oil that's on the surface, and we don't really know how much is in these boats and where they are and where they're going. So anybody that thinks oil is well priced, or the price of oil or what it should be, is kind of not really telling the truth, because there's just too many moving parts, and you don't know where your ships are, you don't know where your ports are, you don't know if it's going to get blown up or not. So,
what is that relationship between Brent and WTI? The unusual price settings at the moment. What does that tell you?
Well, WTI is usually lower because we've got a lot of it, right? And we are a net exporter. And a lot of that's from Mexico and Canada, so it's a little bit quirky. But it really is a supply and demand issue. And the fact is that, our refineries are working at full capacity because we are able in Texas and Louisiana to refine heavy crude, nasty oil from places like Canada and Venezuela better than anybody else. And there's a shortage of diesel fuel out there, right? There's a shortage of jet fuel. And if we don't get this Gulf situation fixed up pretty quick, those numbers are going to go even higher in price, and the economy is going to really suffer. So we need this thing to get cleared up pretty quick. But I think the markets will tell you that things are looking better if oil goes down to 80 tomorrow morning or 60 next week. And the market will tell you that things aren't looking so good with supply and demand if oil goes to 120 and 140 and 150. And either one of those things can happen, in the next few hours. So this is a really critical point in time for this conflict.
What about concerns about private credit defaults? Speaking of Jamie Dimon, he addressed this the other day, suggesting that it's overstated. But he also said that when it does happen, it's going to be higher. The defaults will be higher than expected because of the relaxed rules on leveraged lending generally. Is this something that could, if it's not a concern now, could quickly become a concern in an environment like you're describing, if it continues to be a difficult one with respect to natural resources, energy?
Right. This is a big concern. It's on the front page of every paper. And again, it's because people don't really understand the dynamics and the size and the leverage of this private credit deal. Private credit, Dan, is nothing other than a leveraged loan that is made outside of the banking system, right? There's a lot of these business development banks that are allowed to, raise money for software companies and AI companies, because all of these pensions and insurance companies and sovereign wealth funds and central banks, they demand a clean, uncorrelated flow of income so they can distribute it to their insurance policyholders and their pensioners and all that sort of stuff. But, I was working in trading bonds in the 07, 08 crisis, and that was a lot different. The bond market was a lot smaller back in 07, 08. Now it's $65 trillion. Back then it was kind of 20, right? So the bond market's, 2-3 times higher than it was before. And the mortgage market is bigger than the treasury market, and that was about 65% of all loans back in 08. Now, the leveraged loan business is probably something on the order of 3% of all outstanding debt instruments, which is really a lot smaller than the mortgage market. And the mortgage market back then, remember, people were getting 2 and 3 mortgages and renting out places, and they had a cash job that they had at night or something like that, right? Now, you've got credit analysts with spreadsheets going through software companies and looking at future cash flows and saying, we can package this and leverage it at 5-to-1 and sell it to the, a police department pension of LA or something, and they'll take their 8% a year, and everybody's going to be happy. Well, this is a structured product, which is leverage. And the leverage portion of this is probably going to get worse before it gets better, because people, if retail gets involved, which they are now, and they get scared and they want their money back, they want out. And there's no real exit for this sort of stuff, right? Leverage credit, private credit has 2 problems or 3 problems. Number 1, it's really expensive to get into. Number 2, there's no liquidity. And number 3, there's no exit strategy, right? And when retail is faced with those things, when the market goes down on them, they don't care. They don't understand the risks. They want their money back. So the problem is some of these Blue Owl and Ares and groups like that, they have a cash call and they can't meet them. This is actually good for Jamie Dimon because all those guys have credit lines with these banks, right? So they are saying, Mr. Dimon, we'd like to borrow $250 million or $1
Go back
billion
to
because we've got to pay our investors.
Yeah,
and Jamie Dimon's happy to do it, right? So the point is, I don't think it's as bad as people think it is. I don't think it's going to upset the market, and it's not going to change interest rates very much. So I think it's kind of a tempest in a teapot, except if you're a retail investor, it feels very, very dangerous.
Ray Dalio, of course, founder of Bridgewater, one of the biggest hedge funds in the world, recently sat down with Tucker Carlson. Interesting. I was glad to see Tucker talking about something other than Iran today. And Dalio had this to say about digital currencies that are coming.
What happens if the government issues digital currency? Like, what does that mean?
Well, digital currency is right. You're talking about central bank digital currencies.
Yeah.
Okay, and that there's a great deal of appeal because of the fact that it's easy and so on. But it's and I think it'll be done. A lot happens.
Do you think it will be done?
Yeah. I think it's but what happens in the digital currency, of course, it's easy to transact and so on, and it'll be like money market funds, I think. The question will be first, will they be able to offer interest? So there's a debate now as to whether they will be interest. If they're not able to offer interest, and there will be a debate, probably they won't be. But then they're not an effective vehicle to hold it in because you'll have the depreciation.
Of course.
You'd rather hold it in a money market fund or a bond, but that's debate. There will be no privacy, and it's a very effective controlling mechanism by the government. What I mean is all the transactions will be known. All transactions done with digital currencies will be known, which is good for illegal activities, getting control of illegal activities. But it also means that the government has a great deal of control. For example, they can tax that way. They can take your money. They can establish foreign exchange controls and the like. And so that's something that will be an increasing issue, particularly for international holders of that currency, because they might feel, let's say, if you're a Frenchman and they wanted to have sanctions, they could take your money.
Well, of course.
And so on. So there's the privacy issue of that. And
if you're politically disfavored, you could be shut off.
Politically disfavored, you could be shut off, yes.
Although that happened in the traditional banking system in places like Canada. So, I mean, traditional banking doesn't insulate you necessarily from that either. But I mean, is a central bank digital currency something that's been bandied about for a while now in the age of cryptocurrencies? Is that something that is in the near term, and even to the extent it would come online, would that be something that was particularly disruptive?
I don't think it's disruptive, but, to Tucker Carlson's point and Dalio's, I mean, central banks want digital currencies for one reason. They can tax people, right? It's easier to tax people. And they can kind of say, if you're not doing what we want you to do, we're going to withhold your universal income or something. So digital currencies, sure. China, great. Maybe even parts of Europe, great. But, these are stupid things, and they're controls on humanity. So I don't think you're going to get a digital currency here. In fact, Trump has come out and said that. I hope not, because I just don't. It's kind of universal income sort of oriented. I think it's really stupid. and I think it's disruptive to the free market capitalist system. I mean, you go to Europe, they haven't used cash over there for 20 years, right? So governments love that because they can tax you. Here, I don't think it's disruptive at all. I would say the odds of getting a digital currency from a central bank in the next 10 to 20 years is probably zero, right? So it's not going to be disruptive. However, if you think about a stable coin, right, which is a digital currency that is backed by a U.S. Treasury bill, this is how Iran is getting cash flow for its terrorist activities and its missiles, right? They are selling 95% of their oil to China, and 50% of the oil that comes out of the Strait of Hormuz goes to China. China is directing cash in the form of stable coins to the whoever they are who are running Iran right now. So it's helping them, but it's not illegal, and it's backed by T-bills. So I don't think digital currencies at the central bank level are coming anywhere here anytime soon. Iran, maybe. China, maybe. But, you know, in the United States, I doubt it. The stablecoin story is allowing the Iranian regime to continue this operation, and if it persists in this sort of status quo, they win. We have got to control the flow of oil out of Iran and the money that's going into Iran in a stable coin before we're going to win this war. So I think I have a lot of respect for Ray Dalio. He's made a lot of money, but I think his opinion is slightly tainted, and I don't believe that the threat that he maybe talks about really exists as much as it does, you know?
James Perry, founder, CIO, Perry International Capital Partners. Jim, thanks as always. Appreciate it.
Thank you, Dan. Have a good week and good luck tonight.
Thank you. You too. And you joined us on Chicago's Morning Answer.
It's news, opinion, insight. This is Chicago's Morning Answer on AM 560. The Answer.
Chicagoland certified financial planning professional Tim Stearns discusses taxes in